They say money makes the world go round. But what if I told you that most of the world's money is being moved, shaped, and controlled by a company you've probably never even heard of? No billboards, no flashy commercials, no celebrity endorsements. Yet behind nearly every investment fund, pension account, and corporate merger, one name keeps quietly appearing in the background, like a ghost woven into the code of the global economy. This company isn't a government, it isn't a bank, it's something far more powerful, an invisible machine that manages over $9 trillion, more money than the GDP of Japan, Germany, and India combined. $9 trillion. And here's the shocking part. It doesn't even own most of it. Its power doesn't come from wealth, but from control. Quiet influence over the flow of capital, shaping how industries rise, how governments respond to crises, and how you live your everyday life without you ever realizing it. If you own a retirement plan, if you've ever invested in the stock market, if your government has ever borrowed money or printed more of it, chances are this company's algorithms, analysts, and decisions have already touched your money, directly or indirectly. Yet behind nearly every investment fund, pension account, and corporate merger, this company manages over $9 trillion. Yet despite holding the strings to the global financial system, it operates in near silence. No one elected its leaders, no one voted for its policies, and still it plays a role in decisions that ripple through entire economies, from housing prices in New York to job losses in Asia. Some call it a financial guardian, others a puppet master of modern capitalism. But most people simply don't know it exists. So who are they? How did one organization, starting from a single room in the late 1980s, quietly grow into a behemoth so large it advises central banks, funds governments, and indirectly owns stakes in almost every major company on the planet? What's even more unsettling is how its influence doesn't stop at money. This company now holds data, deep, predictive data, about markets, corporations, even the environmental risks that could affect the future of humanity. It's building a global operating system for finance, and the world barely talks about it. But maybe that's the point. Because the less you know about who moves the money, the less you realize just how much power you've given them. This is the story of the $9 trillion secret company behind global finance, how it rose from obscurity, how it quietly built the modern financial system, and why some say it's become too powerful to fail. So who is the ghost in the machine? Who sits quietly behind the numbers that run the world? Its name is BlackRock. At first, it sounds ordinary, another name on a long list of Wall Street firms. But what BlackRock is and what it does are two very different things. Most people think of banks, stock traders, or billionaires when they picture global power. But the real story begins with a handful of analysts in the small Manhattan office back in 1988, led by a man named Larry Fink, who believed that the key to financial success wasn't risk-taking, it was risk-understanding. Fink had learned this the hard way. Years earlier, while working at another firm, he'd helped design a type of mortgage-backed security, a new financial product that looked brilliant on paper, until it collapsed. One bad call wiped out hundreds of millions of dollars, and with it, Fink's reputation. He was humiliated, but not defeated. Instead, he became obsessed with one question: how can we stop making decisions blindly? That obsession became the seed that grew into BlackRock. From day one, the company had a single purpose: to measure and control financial risk better than anyone else. And to do that, it built something no other firm had, a system that could see what human eyes couldn't. They called it Aladdin, short for Asset, Liability, and Debt and Derivative Investment Network. It started as a tool for analyzing risk inside BlackRock, its own portfolios. But soon, other institutions wanted access. Because Aladdin could do something extraordinary. It could simulate how a single event, A currency crash, a spike in oil prices, or a shift in interest rates might ripple through every market on Earth. It was like giving Wall Street X-ray vision. As more banks and governments plugged into Aladdin, BlackRock gained something priceless: data. Every transaction, every portfolio, every shock the system experienced, Aladdin learned from it. It became smarter, faster, and more indispensable. By the early 2000s, it wasn't just a tool. It was the infrastructure behind modern finance. Today, Aladdin oversees risk for more than 200 of the largest financial institutions on the planet. It helps manage pension funds, insurance portfolios, university endowments, and even central bank reserves. Through it, BlackRock indirectly watches over roughly $20 trillion in assets, nearly a fifth of all global investments. It's not that BlackRock owns the world. It's that the world runs on its system. Think about that. When your retirement fund invests in a stock index, there's a good chance that Aladdin's algorithms help choose what's inside it. When a government decides how to stabilize its bond market, it may use data modeled by BlackRock. When a multinational company issues debt, the buyers and the risk models that evaluate it often come from that same network. BlackRock sits at the crossroads of it all, a silent partner in nearly every major market transaction. And as the assets it managed grew from millions to billions to trillions, the company's reach extended far beyond Wall Street. During the 2008 financial crisis, when global markets were melting down, governments didn't know where to turn. So they called the one firm that seemed to have a map of the chaos: BlackRock. The U.S. Federal Reserve hired it to manage toxic assets. European central banks sought its guidance to stabilize their economies. The very system that once measured risk was now advising the world on how to survive it. That moment changed everything. Because when you're the company trusted to manage crises for governments, you stop being just a business. You become part of the system itself. Since then, BlackRock has continued to expand, quietly, efficiently, globally. It now owns stakes in thousands of companies through its indexed funds. If you look closely at the shareholder lists of Apple, Microsoft, Google, Amazon, or ExxonMobil, one name keeps repeating: BlackRock. It's rarely the majority owner, but it's always there. It holds voting rights, attends board meetings, and has a voice in decisions that shape entire industries. That's why some people call it the world's most powerful company you've never heard of. Because while politicians argue on camera and CEOs make headlines, BlackRock's influence works in silence, through data, through markets, through the invisible architecture of finance. And yet, the mystery deepens. Because for all its transparency reports in public filings, no one outside its inner circle truly knows what Aladdin sees or how much power it gives the firm behind it. How do you regulate a system that governments themselves depend on? Who checks the checker when the checker runs the software everyone else uses? That's the paradox of BlackRock. It's not hiding. It doesn't need to. Its dominance is so vast, so normalized, that it blends into the background of everyday life. You can walk past its offices without realizing you're looking at the command center of global capital. And that's what makes it so extraordinary, and to some, so terrifying. Because this isn't the story of greed or corruption. It's the story of concentration. How power, when centralized quietly enough, stops looking like power at all. And if one company's system now forms the backbone of modern finance, what happens if that system ever fails? Or worse, what if it decides to change the rules? That's where we go next, into the part of the story that reveals how BlackRock's influence actually works, and how it quietly became the unseen hand guiding the global economy.
BlackRock doesn't control the world by owning everything. Its power works differently, through access, influence, and dependence. See, when most people think of financial control, they imagine a billionaire signing a deal or a boardroom full of executives calling the shots. But BlackRock's strategy isn't about owning power directly. It's about being the bridge every other power has to cross. Let's start with how it makes money. BlackRock's main business is asset management. That means investors like pension funds, governments, and corporations give it its money to manage and grow. In return, BlackRock charges small management fees. Tiny percentages, fractions of a percent. But when you're managing over $9 trillion, even a small fraction becomes billions in profit every year. But the money isn't what gives BlackRock its real power. The real power comes from what those assets represent. When BlackRock manages a fund, it buys stocks and bonds on behalf of its clients. That means it automatically becomes one of the biggest shareholders in the companies inside those funds. Apple, Amazon, Google, Exxon, Tesla, you name it. Not because it chose them one by one, but because it manages massive index funds that mirror the stock market. And here's where it gets interesting. Being a shareholder means you get a vote. You get to help decide who sits on the company's board, what policies they adopt, and how they respond to major issues like climate change or executive pay. When one investor owns shares across nearly every major company on Earth, that's a lot of votes. BlackRock controls millions of shareholder votes every single year, votes that influence the direction of the world's biggest corporations. It doesn't always vote the same way. Sometimes it supports environmental policies, sometimes it sides with management. But the simple fact is, when BlackRock speaks, corporate boards listen. Because if BlackRock sells, or even hints at disapproval, entire markets react. That's the first layer of power, ownership through management. The second layer runs deeper, through technology and dependence. Remember Aladdin, that super system that powers global finance? Thousands of financial institutions depend on it, from investment banks to insurance companies to governments. They rely on its models to measure risk, to price portfolios, to predict how markets might move. In other words, they trust Aladdin's view of reality. But Aladdin belongs to BlackRock. That means every day, data from across the financial world flows back into BlackRock's ecosystem, giving it an information advantage no one else can match. It knows how money moves. It sees where the pressure points are before anyone else does. And in a world where information equals power, that kind of insight is priceless. Then comes the third layer, political proximity. When a crisis hits, governments call BlackRock. During the 2008 meltdown, it was hired by the US government to manage the toxic assets that crashed the market. In 2020, during the pandemic, it was brought in again to help the Federal Reserve purchase corporate bonds and stabilize the economy. It wasn't just advising from the sidelines, it was directly helping decide where billions of government dollars would go. Think about that. A private company hired by the government to decide which corporations get rescued and which don't. That's not conspiracy. That's contractual influence, legal, official, and incredibly powerful. And it doesn't stop in America. BlackRock advises central banks in Europe, Asia, and the Middle East. It provides risk models for sovereign wealth funds that control national budgets. In some countries, its executives are treated like unofficial diplomats, financial envoys with access to presidents and finance ministers. That's the third layer of power, influence without election. But the most subtle layer, the one almost no one talks about, is psychological. BlackRock has built an image of being too competent to question. It's the firm you call when you're in trouble, the one too smart to fail. Governments trust it because it already runs so much of the system. Investors trust it because everyone else does. It's a feedback loop of credibility, the kind that makes oversight almost impossible. When one company becomes the default choice for the world's largest financial problems, it stops being a contractor and becomes part of the infrastructure, like electricity. You don't notice it until it's gone. That's why many critics argue that BlackRock has become the financial world's shadow government, not because it's plotting in secret, but because its presence is everywhere. Through ownership, through data, through policy advice. It doesn't need to break the rules. It is the rule book. And as its influence expands, so does the question. Where does the line blur between managing risk and managing power itself? Because when the same company helps design the markets invests in them, and then advises governments on how to protect them, it becomes nearly impossible to tell where the market ends and BlackRock begins. And that's where the world's unease grows. Because if one company's data systems, financial models, and investment decisions are tied into the very DNA of global finance, what happens if something goes wrong? Or what if one decision made in one office ripples across every market on Earth? That's what we explore next, because while BlackRock's reach is massive, its secrecy is even more fascinating. And to understand how it became the company everyone depends on, yet no one truly sees, we have to look at the side of the story few dare to tell, the part where transparency ends and silence begins.
The strange thing about BlackRock's power is that it doesn't look like power at all. There are no grand headquarters carved into mountains, no armies, no leaders giving fiery speeches. Just an office building with clean glass windows, soft lighting, and quiet people looking at screens. Yet from those screens, trillions of dollars move every single day. The illusion of invisibility begins with branding. BlackRock doesn't sell anything to the public. You can't walk into a store and buy a product with its name on it. You don't see TV commercials or flashy sponsorships. The company doesn't need you to recognize it because it operates in a world above consumers, a world of capital and policy. Its clients aren't individuals, they're institutions, pension funds, central banks, insurance giants, and multinational corporations. So while companies like Apple and Coca-Cola fight for your attention, BlackRock quietly pulls fees from the money those same companies depend on. That's the first layer of its secrecy, invisibility through irrelevance. You never hear about it because you were never meant to. But there's another, deeper layer, the opacity of finance itself. Most people don't understand how their money moves once it leaves their hands. You deposit savings, contribute to your pension, or invest through an app, and that's where your awareness stops. Behind the scenes, those funds are bundled, pooled, and reallocated through networks of brokers, fund managers, and custodians. And somewhere deep in that maze, BlackRock's systems are quietly processing, calculating, and steering how those funds behave in the market. The result is a kind of financial ghost, everywhere, yet nowhere. And the architecture of global finance helps hide it even more, because when you own a little bit of everything, you never stand out as owning anything in particular. Look at any major company, Apple, Amazon, or even oil giants like Shell, and you'll see BlackRock's name listed among their top shareholders, but never the top, never the loudest, always just below the threshold where public outrage might notice. It's like a whisper woven through the entire economy. And that whisper extends into government halls too, because when the financial system gets shaky, when markets crash or currencies collapse, regulators, ministers, and central bankers need data fast. They need someone who understands the system inside and out, someone who can model outcomes, price risk, and predict collapse. And more often than not, that someone is BlackRock. In moments of crisis, information equals control, and if you control the data, you control the decisions that follow. That's why, even though it's technically a private firm, BlackRock often finds itself sitting at the same table as world leaders. Its executives brief governments on the economy, climate risk, and financial stability. They shape how trillions in public funds are allocated, yet they aren't elected and they don't answer to voters. It's not illegal, it's just unchallenged. But the reason it feels secret goes beyond money and politics. It's about psychology. Human beings are wired to notice what's visible: faces, brands, logos, personalities. We understand stories with villains and heroes. But what happens when the power isn't a person, but a system? What happens when the real decisions aren't made in boardrooms we can see, but in algorithms we can't? That's where BlackRock lives.
in the invisible layer between governments, corporations, and markets. It's not hiding in the shadows, it is the shadow. And the people inside it aren't plotting world domination, at least not in the cartoonish sense. They're doing what they believe they're supposed to do: manage risk, maximize returns, and maintain stability. But in doing so, they've created a system where no single person is in control. And that's what makes it so dangerous. Because when power spreads across systems and data, rather than humans and faces, it becomes untouchable. You can't vote it out, you can't protest it, and most of the time you don't even realize it's there. That's why, for millions of people, BlackRock's influence feels like a secret. Not because it's deliberately hiding, but because it has woven itself into the very structure of how global finance works. The company doesn't have to be secretive. It just has to be essential. And once something becomes essential, it becomes invisible. But there's another side to this invisibility, one that's far more controversial. Because with every passing year, BlackRock's reach expands beyond finance. It's now venturing into areas like climate policy, artificial intelligence, and even corporate ethics. And every move raises a question few people are asking out loud. If one private company can shape not just markets, but also values, whose interests is it really serving? And that's where the story starts to turn. Because behind the polite press releases and risk reports, there are cracks, growing concerns, watchdog warnings, and conflicts of interest that have begun to surface. In the next section, we dive into those controversies, the real stories that have made journalists, politicians, and even investors start to question whether BlackRock has quietly become too powerful for anyone's good.
Power this concentrated never lives quietly for long. Because once the world realizes how deeply a single company is wired into its financial bloodstream, questions start to erupt. BlackRock calls itself a fiduciary, meaning it's supposed to act only in the best interests of its clients. But who are those clients when the company manages money for governments, corporations, and ordinary workers, often all at once? That's where the conflict begins. In the last decade, BlackRock CEO Larry Fink became one of the loudest voices in global business calling for ESG, environmental, social, and governance, investing. He urged companies to think beyond profit, reduce emissions, treat workers fairly, prepare for a greener economy. On paper, it sounded noble. But almost immediately, critics saw something else: a private firm using its trillions to nudge the policies of entire industries. U.S. state officials accused BlackRock of mixing politics with investment. Oil-producing states claimed the company was boycotting their energy sectors. Environmental groups claimed it wasn't doing enough to fight climate change. In the span of a few years, BlackRock was attacked by both sides for being too woke and not green enough. That's how deep its reach goes. Even when it tries to please everyone, it can't. Then came the controversy that truly defined its image. During crises, from the 2008 crash to the 2020 pandemic, BlackRock wasn't just advising governments, it was implementing their rescue plans. In 2020, the U.S. Federal Reserve selected BlackRock to help purchase corporate bonds with taxpayer money. It was a logical choice. No one else had the tools to move that much capital that quickly. But watchdogs asked the uncomfortable question: how can a company be hired to manage government investments while also running private funds that profit from those same markets? To avoid conflicts, the Fed created safeguards, yet the perception stuck. It looked like Wall Street's referee was also the player holding the ball. And it wasn't just America. European regulators later raised concerns about BlackRock's contracts with the EU Commission and national banks. Some lawmakers demanded stricter transparency, arguing that one firm should never be both advisor and beneficiary of the financial system it helps design. Unlike elected officials, BlackRock's leaders don't answer to voters. They answer to shareholders. So when the company pushes policies that affect housing, climate, or jobs, there's no democratic check. For example, when BlackRock's real estate funds began buying up residential properties after the 2008 crisis, small communities accused it of driving prices out of reach. The company said it owned a tiny fraction of the market. True, but perception is everything. To many people, it looked like the same entity steering monetary policy was also buying the homes ordinary families needed. And then there's the quiet, invisible controversy: data. Through Aladdin, BlackRock's system processes information for hundreds of institutions. No one claims it misuses that data, but privacy experts warn that such a vast information hub could create the ultimate economic bottleneck. If Aladdin ever went down, or if its models were wrong, the shock could echo across every market it touches. In a sense, the global financial system has put all its faith in a single machine, a machine that one company controls. Here's the paradox that makes these controversies so powerful. BlackRock's biggest strength, its size, its access, its credibility, is also its greatest weakness. It can't avoid influencing the world even when it tries. And as long as governments, investors, and corporations keep relying on it, the line between public policy and private profit will stay blurry. Critics see this as a dangerous concentration of power. Supporters call it efficiency. But whichever side you take, the truth is the same. A single company has grown so central to global finance that questioning it feels like questioning the system itself. And that raises a chilling question. What happens if the world ever decides it wants to pull away? Could it even survive without BlackRock's machinery keeping the gears turning? That's where the next chapter takes us, to the moment the world finally realized just how dependent it had become on the $9 trillion giant behind the curtain.
If you think this story is only about governments and billionaires, think again. Because whether you realize it or not, you're already part of BlackRock's system. Your retirement fund, your insurance policy, your college savings or mutual fund account. Chances are, BlackRock manages a piece of it, quietly earning fees from the money you've spent a lifetime building. This isn't an accident, it's design. Over the past 2 decades, the way people invest has completely changed. Instead of picking individual stocks, most investors now buy into index funds, low-cost baskets that track the market automatically. And who runs those funds? Mostly 3 firms: BlackRock, Vanguard, and State Street. Together they control over $20 trillion in global assets. But BlackRock leads the pack. Through its iShares brand alone, it owns slices of almost every major public company on Earth. Apple, Amazon, Microsoft, Tesla, Coca-Cola, all have a quiet BlackRock footprint. This doesn't mean BlackRock owns them outright, but it does mean it votes on their shareholder decisions, who sits on their boards, how they set executive pay, even which direction their businesses move. It's like having a single hand gently pressing on the steering wheel of the entire global economy. And that hand isn't elected, it's algorithmic. Here's where things get unsettling. The system can't unwind itself anymore. Governments rely on BlackRock's tools to monitor markets. Corporations rely on its investors to keep share prices stable. Banks rely on its software to manage risk. And individuals rely on its funds to grow their retirement savings. If any one piece were suddenly removed, the shock wouldn't stop at Wall Street. It would ripple through pension plans, stock markets, and even the value of national currencies. In other words, BlackRock isn't just in the system, it is the system. And that's exactly how it gains something no other company in history ever has: global dependency. When crises hit, nations now call BlackRock first, not just for advice, but for stabilization. In 2020, it was hired to run emergency bond buying programs for the US government. In Europe, it's been commissioned to study how to make economies greener. In Asia, it's helping design digital infrastructure for capital markets. Different continents, different goals. Same firm. That level of influence might sound comforting. After all, it means someone knows how to keep the system running smoothly. But it also means that too much stability can turn into control. Because if everyone depends on one network, one algorithm, one source of truth, what happens when that source decides to shift? Or worse, what if it breaks? Most people never notice it, but the effects are everywhere. When companies rise or fall, BlackRock's voting power can tip the scales. When housing prices surge, its real estate investments can magnify the trend. When governments set new regulations, BlackRock's reports often influence the language. It doesn't need to command anyone directly. It simply shapes the environment everyone else has to operate in. That's real power. Silent, systemic, and nearly invisible. It's why some economists call BlackRock the fourth branch of government. Not because it legislates or enforces laws, but because it manages the consequences of them. And it's why, whether you live in New York, Paris, or Manila, your savings, your job, even the price of the food you eat might trace back to the decisions of one company most people have never heard of. This is where the paradox deepens. If governments tried to limit BlackRock's reach today, they'd risk destabilizing their own economies. If investors pulled out, markets could collapse. If citizens protested, policymakers would have nowhere else to turn. It's a web that can't be easily untangled because it's made of trust, technology, and time. And that's the genius of it all. BlackRock didn't conquer the world by force. It did it by making itself indispensable. But if history has taught us anything, it's that no empire, no matter how invisible, lasts forever. Because once dependence becomes dominance, resistance is only a matter of time.
Every empire eventually meets resistance, and for BlackRock, that moment has already begun. For years, the firm operated in the shadows, quietly managing risk, stabilizing markets, and building an empire of trust. But once the world noticed how far its influence reached, politicians, journalists, and even rival financiers started asking one uncomfortable question. Can any company be this powerful without crossing a line? In the United States, BlackRock suddenly found itself in the middle of a political war it never asked for. Conservatives accused it of pushing woke capitalism, using client money to promote climate and social agendas. Liberals accused it of hypocrisy, talking about sustainability while still funding oil, weapons, and authoritarian states. It became the rare company attacked from both sides of the political spectrum. In 2023, several U.S. states began pulling billions of dollars in pension funds from BlackRock, accusing it of boycotting fossil fuels. Larry Fink, the firm's CEO, defended his stance, saying the company doesn't play politics, it just helps investors prepare for a changing world. But in the age of media outrage, perception is everything, and perception was turning fast. Across the Atlantic, European regulators began their own investigations. The European Parliament raised concerns that BlackRock's contracts with the EU Commission, particularly around climate and banking policies, might create conflicts of interest. How could a company advising Europe on sustainable finance also profit from the very companies it's regulating? France and Germany even considered tighter laws to prevent asset managers from holding too much influence over corporate boards. It wasn't just about money anymore. It was about sovereignty.
If financial power shapes national policy, who's really in charge? Elected governments or private firms? Behind closed doors, a quiet arms race is forming. Governments are building their own risk systems to reduce reliance on Aladdin. Competitors are trying to develop rival technologies to win back clients. Even central banks are exploring digital twin systems that can mirror Aladdin's predictive models without being owned by any one corporation. But catching up isn't easy. BlackRock had a 30-year head start, billions in data, and an algorithm refined by decades of market chaos. Replacing that isn't just expensive, it's almost impossible. That's the paradox of control. Once you rely on someone to keep the system stable, you give them power to decide what stability means. Meanwhile, the public has started paying attention. Documentaries, think pieces, and viral posts now name BlackRock as the shadow bank behind global capitalism. Protesters accuse it of distorting housing markets. Economists debate whether it poses a systemic risk to world finance, a single point of failure that could shake everything if it collapsed. BlackRock insists it's misunderstood. It argues that it doesn't own the companies it invests in, it simply represents millions of individual investors who do. It says it doesn't manipulate markets, it makes them more efficient. And it warns that villainizing it could harm the very people whose savings depend on its performance. There's truth in that, but the debate exposes a deeper truth too. A truth about how modern capitalism has evolved. Because this isn't really a story about one company. It's about the entire structure of global finance, a structure that rewards size, efficiency, and connectivity above everything else. And once a system like that creates a giant, it doesn't destroy it, it depends on it. So now, governments are torn. They want control, but they can't risk breaking the machinery that keeps their market stable. They want independence, but their own economies are built on data, funds, and systems powered by the very firm they're questioning. It's the financial world's version of addiction. You can't walk away without crashing. That's why even as regulators threaten crackdowns, BlackRock continues to grow. Because every time there's uncertainty, a war, a crisis, a recession, the world turns to the one company that already knows how to manage it, the same company everyone claims to fear. And that leads to the biggest question of all. If the system ever truly falls apart, will BlackRock be the savior or the cause?
Every empire believes it can last forever. But history doesn't work that way. It builds giants only to eventually test them. For decades, BlackRock has grown quietly, not through force or fame, but through something much more powerful: trust. Governments trusted it to manage their crises. Investors trusted it to guard their savings. And the world trusted that a system this efficient could never fail. But cracks are starting to show. BlackRock's dominance depends on one fragile assumption: that the financial system itself will always behave predictably. That markets will stay stable, algorithms will stay accurate, and governments will always call for help when things go wrong. But what happens when that assumption breaks? We've seen this story before, from the banking monopolies of the early 1900s to the tech empires of the 2000s. Power always expands faster than regulation. And when it grows too big, too fast, it begins to bend the rules meant to contain it. Right now, global regulators are racing to catch up. They're drafting new rules for index funds, new oversight for asset managers, new firewalls to separate public and private power. But they're also walking a tightrope. Tighten control too much, and the markets panic. Do nothing, and one company quietly becomes the operating system of global finance. Even if governments wanted to cut ties, how would they do it?
Aladdin's code runs through the veins of the financial world, from central banks to pension funds to corporate balance sheets. It's not just software anymore, it's infrastructure. To unplug from BlackRock would be like trying to remove the internet itself. Possible in theory, catastrophic in practice. And that's the irony of it all. The same system built to spread risk has now concentrated it in one place. If BlackRock ever stumbled, even slightly, the tremors would reach every continent. Now, as the world shifts toward AI-driven decision-making, the next evolution is already underway. BlackRock is developing machine learning models that predict global economic movements faster than human analysts ever could. Imagine an AI capable of anticipating inflation, trade wars, or political unrest before they happen, and shifting trillions in assets instantly. That's not science fiction. It's the future of finance. But with that future comes a new risk. When algorithms hold the steering wheel, who's really driving? We live in an age of endless options, thousands of banks, funds, and financial platforms. But behind that illusion of choice, a handful of firms quietly manage the flow of global wealth. It's like standing in a marketplace with 100 stalls, all owned by the same company. Most people will never notice it. They'll keep buying homes, investing in funds, and trusting the markets to work as they always have. And maybe that's how the system survives. Not by hiding, but by being too normal to question. So, can the system ever change? Maybe, but only if the world truly wants it to. It would take nations cooperating, investors diversifying, and citizens demanding transparency in a system built to avoid it. It would mean redefining what power looks like in a digital, data-driven age. And maybe, just maybe, realizing that the most dangerous monopolies aren't the ones we can see, but the ones we've learned to depend on. Because sometimes the most powerful thing in the world isn't an army, a government, or a bank. It's the quiet company behind them all, managing the flow of money, the direction of policy, and the shape of the future itself. And as of now, that company controls $9 trillion. The question isn't whether it runs the world, it's whether the world can run without it.